Hello everybody, how's it going? Can I get an audio and visual check within the YouTube chat if anybody's watching right now before I jump into it? Okay, let's just jump straight into it. Welcome to a Capital Hungry Monday Market Analysis webinar. I will be doing some technical and fundamental analysis and laying out trade ideas on gold, GBP Jpy, GBP USD, EURUSD, USDCAD, as well as US30. I'm going to be doing full breakdowns and dissections of what has been going on these various pairs and trading instruments so you understand the fundamental impact and what to project and expect coming into the near future if current market sentiment holds and continues to have power. Okay, so before we get started here, make sure you guys check out all of your resources, Capital Hungry resources, and check out all of the links within the description. If you guys enjoy these various webinars I do every week, whether it's the Monday market analysis, the Wednesday scalping session, or the Friday self-development live videos, please do me a favor and like the stream, as well as share around the YouTube channel, as it really helps gain exposure, especially as a lot of my videos are demonetized and flagged due to the things we talk about on this channel. All right. Okay, so before we jump into it, in terms of recent fundamental points, we can see that market optimism is coming back into the scene with global equities picking up and finding ground. More importantly, coming from a fundamental catalyst today of Joe Biden selecting Jerome Powell as the Federal Reserve head again. This led to a bearish impact on gold, US dollar bullish, equities bullish, and Japanese yen bearish due to the impact on market sentiment with the flow of smart money. We've seen also on top of this, since the last FOMC statements and UK interest rate decision, that the central bank speakers from the Bank of England as well as the Federal Reserve have been more on the hawkish tone side, talking about an optimistic outlook for their economies and seeing a stronger recovery in the coming year, which has also been leading to more of an optimistic impact on market sentiment and investor behavior. Okay? Now, I want you to understand that and understand this information accordingly. We can see, if you've been following along the previous market update webinars or trading sessions, even for free on the YouTube, we've been primarily playing Japanese yen bears and US dollar bulls, okay? Investors are still continuing to price in the economic recovery within the US as more people are getting vaccinated, as we have the labor force and labor market rebounding, as we're having economic data rebounding and a lack of lockdowns. We've been having very strong bullish market structure and historical repetition on dollar strength. And with this market optimism, the Japanese yen as a safe haven currency, which behaves in the properties of a safe haven, of course, has been a lot more bearish as the demand for safe havens in terms of the currency pairs has started to dwindle. We can also see the volatility index having multiple failures to break 18.65 highs. The same time, global stock markets here are starting to find some ground. So the sentiment is looking very optimistic, and I personally do want to play that to my advantage of playing US dollar strength, market optimism, and Japanese yen weakness when we dive into our various currency pairs and trading instruments that we're looking to take advantage of. Okay? Now, let's dive into gold here. This is gold on the daily time frame, and we're in very similar historical repetition to the phase we had after the 2008 financial crash, when gold was heavily inflated in value due to low interest rates, high economic inflation, a lot of uncertainty and doubt, And then we had this obviously very strong corrective phase until we started to go back bearish and create this overall bearish market structure. I've been telling you guys about this because as we have not faded out significant supply zones, the overall macro bearish market structure is still intact, with potential for us on the higher time frames to drive into the 1680s. What I want you to look at here when we're looking at gold in this corrective structure is overall price has still been going down on gold, with continuous lower lows being printed and very significant supply zones also failing to break over here, almost coming to tap into the 1900s. And any type of very aggressive bullish pullbacks or short-term bullish market structure does essentially get faded out, even when it seems like it's extending for a longer period of time. And we do see the sellers come back into play with that historical and technical repetition, printing continuous lows. As in terms of the fundamentals, we are starting to pick up US dollar strength. We are getting the central banks more on a hawkish tone, talking about economic recovery. Economic data is rebounding, and we can also see, based on the market structure and price action, does everything here make sense so far, right? And I'm gonna break down exactly what happened here on gold over the last 2 weeks, why we were so bullish and why we were so bearish, and what I potentially see to come. But does everything make sense so far? Right? So even though we've been playing some short-term pullbacks from lows being printed, we still have not faded out the overall macro corrective bearish market structure. Now, look over here, okay? See over here, the reason why gold was so bullish for this time period here was for multiple reasons. First, we had the Federal Reserve throw a curveball in terms of the FOMC at the start of November and copy and paste the September FOMC, right? This led to a bullish impact on gold as they threw the curveball, which we discussed in our Fed rate webinar. Okay? Then after that, we had extremely high US inflation, and at the same time, Fed's talking about downside risks during this period. Okay? So you can see here, initially, as we're maintaining this bullish market structure, we have this pullback to this area. At the November FOMC, Feds throw a curveball and copy and paste the September FOMC, which all of the events and information given within the September FOMC were already priced in. The tapering schedule, the amount of tapering, and so forth was already well known and priced in. Investors were looking for more confirms of future rate hikes or any increase in tapering to see if they were going to bring anything new to the table in terms of having a hawkish tone. The Feds instead were still pessimistic towards the economic recovery and just copied and pasted the September FOMC. This led to a nice bullish push and an upside move and rally that we played accordingly. Then the NFP that week got faded out as the focus was on the Fed FOMC sentiment, and the following week we had extremely high US consumer price index data signaling at higher yearly and monthly change in inflation. This led to an increase in demand in gold as investors hedge inflation risks by pooling into gold, and a continued extended rally that went into the 1880s. We wanted gold to go into the 1900s to retest that supply zone, but failed to break any higher, and we created this consolidation zone at these highs. At the end of last week on Friday, we had Federal Reserve Speaker Clarida have a more optimistic tone towards economic recovery and talking about future rate hikes. And this led at the end of the week more exhaustion by gold buyers at the intraday highs. And then with the optimistic talks from Federal Reserve Clarida, us coming down and driving below 1845 intraday support zone. Then today we had Joe Biden announce, which I created a short YouTube short about. It's about 50 seconds long, summarizing that. Joe Biden announces Jerome Powell as the Federal Reserve head again. Stock market investors absolutely love this because he's the one, well, he's not the one alone, but he's the one who was reading the script in terms of pumping the markets for the last year and a half and keeping the stock markets and other asset classes so bullish, right? So when Joe Biden announced that Jerome Powell is going to be the Federal Reserve head again, which was announced right at 9 a.m. Eastern prior to NYSE Open, the stock market pushed bullish, dollar pushed bullish, Japanese yen turned bearish, and gold pushed bearish as this was an optimistic fundamental catalyst and impact. Okay? Now, that all makes sense and is very clear cut. And this all makes sense of what I'm potentially looking for in terms of repetition. Right? Essentially, as we haven't faded out these very significant supply zones across the board, I do want to see another set of impulsive sells to drive us into these prior lows at 1680s, okay? But what I want you to understand is that the sentiment from last week in terms of the high inflation and bullish structure got faded out in a singular daily candle, and we are back below those significant previous supply zone highs as well. So this new daily candle, and when we zoom into the intraday time frames, as we have this very strong market optimism from Jerome Powell being selected again as the Federal Reserve head, and it's not just that, you also have Jerome Powell and the next potential vice chair, Brainerd, both having optimistic hawkish tones, talking about economic recovery, economies looking very good, need to start combating inflation, and further supporting the comments from Federal Reserve Speaker Clarida the prior week. On top of having stronger economic data, you can see we have a lot of potential for pullbacks and driving down to these potential price points of interest, and seeing that repetition take place again here, where overall gold has been still going down. We have these continuous lower lows printed that we essentially revisit and retest within that historical repetition of what I was showing you guys that happened post 2008 period. You have these very aggressive pullback phases that don't fade out significant supply zones to collect a lot more sell orders on a higher time frame perspective. You get these short-lived, which can usually be weeks long, months long, bullish rallies that end up getting faded out as you potentially go back to revisit the low points again, right? Right now, I still see us in the potential with, even when you see these rejections, when you get these zones created here. You get this consolidation zone and pretty aggressive break. Consolidation zone, pretty aggressive break. I still see us driving down to 1770s and 1780s, but the next set of safer sells when we look at the higher time frame is going to be around 1760s to take that down all the way down to 1680s targets and continue to play this corrective structure on gold as we have more optimistic markets at the time, and that takes away the demand for gold in the short term. So now, on the intraday time frames, we can see we have this short-term bearish market structure that's being created from these impulsive moves. And I still see us driving down into 1780s here, okay? If we create a consolidation zone in support in this area at 1803, just as we can see we have printed very significant lows, I'd be looking for pullback buys above 1805 up to retest better sell points at 1820 or potentially 1812 to continue back down, or just the breaks below 1803 sells. So only short-term pullback buys if we break above 1805 where the green box is, above these current intraday candle body highs, and that's only validating if we have some exhaustion by sellers at the low, a support created, and again, that's just anticipating playing a potential pullback to still set up the better risk versus reward sells at either 1812 higher time frame key level or a deeper retest at 1820, and then continuations back down with a break below current lows at 1803. We can see strong potential for, so you can screenshot this, rewatch this, whatever you need, right? So let me summarize again. We can see strong potential on the higher time frames of historical repetition, just like we saw post 2008 market crash. Highs peaked, start to form some bearish market structure, strong demand zone that you continue to drive down to, potential that we are in this phase here to start making our way back down to these lows now that we're well past the pandemic state, well past the state of economic fear, uncertainty, and doubt, potentially coming into a time of looking at interest rate hikes by the central banks, as well as getting more and more people vaccinated, and of course, economic recovery in terms of economic data, right? Number two is on the daily time frame. The rejection at this supply zone, the order block that was formed, and also the fundamental catalyst behind this that was breaking down and already told to you, as well as all this bullish price action, almost 2 weeks of bullish price action faded out in 2 days. On the intraday time frames, the bearish market structure and current bearish price action as well here, and those trade ideas laid out accordingly for gold. Does that make sense fundamentally and technically in terms of what gold has been doing over the last period of month? Why it was so bearish, why it was so bullish at the start of November, and why it was rallying so high, and why we have turned so bearish, and how we played that accordingly. Like, there's a YouTube short about how we played that accordingly from 1840 and 1828. And if you watch that YouTube short in the morning, you could have continued the sells from 1828 and 1820 yourself. You know what I mean? Okay, very nice. Also, the confluence of short-term dollar strength and overall market optimism in terms of our sentiment indicators of VIX relatively flat, equity starting to pick up some ground, Japanese yen bearish, which shows us a decrease in gold demand as a precious metal safe haven. All right. Now, GBP JPY. Overall, GBP JPY has been extremely bullish. We've only had buyers print highs, have pullback phases from these highs, and then once you break out of that pullback phase, you continue to extend up, back up to revisit the previous highs, right? Now, we played the GJ sells here accordingly, and I'm gonna explain exactly what happened in this whole in this whole yellow square here of why we were so bullish for this period, why we were so bearish here, and what I expect to come now going back with the bullish trend and why. Okay? So, for those of you who followed previous market update webinars, we were extremely bullish on GJ after the 149 demand zone was revisited and failed to break. The new quarterly candle that started for Q4 of October revisited 149, collected buy orders and failed to break. Then the following weekend, we had Bank of England speakers start to give rate hike signals. Just them giving rate hike signals, investors started to price this in ahead of time, and this increased the value of GBP against the safer currency at the time being the Japanese yen, and we played this bullish rally, breaking above the previous highs and printing new highs by buyers here at 158, right? After 158 was peaked, due to investors pricing in the potential rate hikes to come, what ends up happening is we enter this corrective bearish market structure, but here have a bearish impulsive move that ends up creating stronger bearish market structure for the time being. The fundamental catalyst that corrected this upside push here, which led to this bearish impulsive move here, was the Bank of England's actual rate decision, them not hiking the interest rates. They followed suit with the Feds through a curveball, did not go with market expectations in terms of hiking the rates, and were more pessimistic towards economic recovery. This led to an impulsive drop here on GBP and some short-term bearish market structure that was created accordingly. But now we can see that we started to create this base at the previous intraday high price points here and support at 152.5. Last week, we had this rejection at bearish market structure here and a very strong impulsive drop that occurred here. This impulsive drop was from Austria announcing that they were going back into a full lockdown. This Euro nation going back into a full lockdown brought some short-term market fear, which just brought a quick burst to the Japanese yen and a short-term drop on UK and Euro equities. But what I want you to understand is even with that impulsive drop, we came back down to these previous lows and failed to break, still maintaining the higher time frame bullish market structure and integrity. And today, we corrected this downside move here with the optimism we got from the Jerome Powell headline accordingly. So I do see potential buyers coming back into the scene from this 152.5 price point for the reasons stated. One, Bank of England not hiking the rates has been priced in. Okay, first, number one, bullish market structure. Number two, highs printed by buyers, pullback phase from the highs printed by buyers. Number three, the pullback phase did not fully correct the upside move. Number four, the lack of rate hikes by Bank of England priced in, and a low was created here. Number five, even with short-term market fear, we still failed to break this low. Number six, Japanese yen is individually bearish, and UK equities are still bullish again. Number seven, if we break above this corrective structure here and these candle body highs, we're going to be looking to start scaling buys back into revisiting 158. Just like anytime you have a pullback phase, you get the buy orders back into the market and you revisit those previous high price points and continue back with the overall trend. Does that make sense for everybody? So right now you can see in terms of market sentiment, UK equities, even though they're having a bit of a pullback from highs, still bullish, starting to find a little bit of a support here, right? The Japanese yen is bearish and printed new intraday lows here on the hourly and 4-hour time frames. And when you come to the intraday time frames here on GJ, you can see we're starting to get very strong reaction at these lows and previous higher time frame demand zone at 152.5. So I am starting to potentially shift back into a bullish bias with the safer buys being above 154.200. buys 153.5 and also buys above 154.5. I would only see safer sells on GBP JPY at this point if we fade out this bullish impulsive move here that came from the market optimism from Jerome Powell, as well as Japanese yen strength and UK equities being bearish. I would only look for sells with further market fear okay. Okay, so far that is analysis on gold and GBP JPY. I just forgot to talk about the economic events. You do want to keep in mind that we do have a lot of PMI data, which is going to be impacting dollar, Japanese yen, and market sentiment. In my opinion, this PMI data is still going to be solid across the majority of the board. France and Germany might be a bit off, but I think Eurozone PMI overall is still going to be relatively solid. Same thing with UK PMI and same thing with US PMI tomorrow morning. This is the economic data we have on the docket, which I forgot to discuss at the start of the webinar. We have retail sales and manufacturing PMI at Asian session, 5 p.m. and 4:45 for Australia, 3:15 a.m. Eastern France PMI figures, 3:30 a.m. Eastern Germany PMI figures, 4 a.m. Eastern Eurozone overall PMI, 4:30 a.m. Eastern UK PMI, 9:45 a.m. Eastern US PMI. PMI is a major economic indicator on recovery or decline, especially after the pandemic state, and having these figures above prior and above forecast or even just well above 50 is still a good sign of economic recovery and optimism overall. Okay. Now, GBP USD. Even though I'm on a bullish bias on GBP JPY, GBP USD is a whole different ball game. The reason for that is the secondary within this quote is the US dollar. The US dollar is the world's reserve business currency, and regardless what pair the US dollar is in, it holds a lot of weight. So when you have fundamental catalysts primarily impacting the dollar, it will take over any other fundamental catalyst impacting the other currency. That's why when you can see that GJ was so bullish for a time period, GU has primarily been bearish, with sellers continuously printing new intraday lows. And what you can identify is that this structure over here, since pretty much May, has been the inverse of the dollar index movement here. This is the dollar index chart on the 4-hour time frame, which you can see has been very nice and bullish, right? Buyers continuously printing intraday highs, just having pullback phases, and primarily overall continuing up. EURUSD and GBP USD in terms of general market structure on the higher time frames and intraday time frames have been the inverse of the dollar index chart, where USDCAD has been more of a direct correlation of the dollar index chart, as investors are continuing to price in the economic recovery as well as tapering and future rate hikes to come, which has kept dollar very nice and bullish since June, and very nice and bullish on the intraday time frames overall in terms of the current price action volatility. Very nice and bullish, and we want to look to play that sentiment, right? Here you can see when we're zooming in more to the intraday structure, we had this pullback from new lows being printed, more sell orders enter the market, And today, with stronger US dollar strength from the fundamental catalyst of Jerome Powell being elected again to be the Federal Reserve head, as well as the Feds and other central bank speakers having more of a hawkish tone towards economic recovery, we had a very nice bearish downside move to these previous lows again, right? So on GBP USD, we're going to continue to play these sells. What I'm looking for is either breaks above 1.34, sells in all of these various zones, playing the continued US dollar strength, sentiment from Jerome Powell being elected still holding more strength, bearish market structure to revisit these lows at least. Very nice rejection here, sell orders collected, break of corrective bullish market structure with the break and retest here, stronger bearish price action in terms of the intraday candles being much larger and consecutive bearish candle closures showing us sellers are in control. Not looking for any buys here on GU, just looking for these pullback retest areas. We're probably not going to get this pullback there, the deeper one, but even something along the lines of this. Still looking for the sells at those price points given on the screen where the red boxes were marked out. Okay. You're going to see a similar tone here and similar outlook on EURUSD, where extremely, like I don't have to explain it to you, daily time frame, intraday time frames extremely bearish. Just having sellers continuously print lows, having pullback phases, and continuing further to the downside. Obviously, this is further validating the strength and weight the dollar holds regardless what currency pair it is involved in. Very nice intraday bearish market structure as well here. If we can break above 1.25, pullbacks to 1.30 sells, breaks below 1.25 sells, breaks below 1.2100 sells. Even though we might get some stronger Euro PMI data, the Euro PMI data will most likely just create a pullback on Euro against the dollar, and we'll still have us going to a better supply zone, collecting more institutional sell orders, because the overall economic rebound and market optimism is going to keep the dollar more bullish, as well as investors are going to have the same expectations for US PMI, and dollar just holds a lot more strength regardless what pair it's in, due to being the world reserve business currency, right? So very similar to GU, pullback buys, current retest of these levels shared buys, playing the bearish market structure, bearish price action, continuing to play the dollar strength as well as market optimism, and those trade ideas given on EURUSD. Now, USDCAD, you can see from these low points, has been the inverse and has been more directly following dollar index movement, and has been printing the stronger bullish market structure, with buyers continuously printing intraday highs and only getting pullbacks and continuations to the upside. It doesn't look like we have too much exhaustion by buyers at these highs being printed at the current moment, and there's still a lot of probability with the current dollar strength, as well as oil also being in a bit of a pullback, for us just to continue bullish with the overall structure. If we create a support or break and retest above 2.7, I'd be looking for the buys there. Or if we pull back to 2.64, continuation buys on USDCAD. We have the confluences of bullish price action and bullish market structure, with buyers continuously printing intraday highs, only having bearish pullback phases or bearish consolidation zones to collect more orders before continuing up. The Canadian dollar has been a bit softer. At the same time, oil's just been doing a pullback from highs due to that correlation of the Canadian dollar to oil. And we can also see that Jerome Powell being elected as the Fed head again had that stronger impulsive impact on the US dollar. So we had that continuation move to take advantage of, and are going to potentially be looking to further take advantage of that too. Okay. Last but not least, US 30 stock market index. We can see the buys on the upside is getting a bit faded out here. And we're still, even though we're extremely bullish on the higher time frames, we're still respecting this corrective structure, which I can see further drive down into this demand zone at 35,200 when we're looking at US 30. Okay? So we're still going to be looking that we're not going to touch it at the current price point. But if we pull back to 35,850, I would see short-term buys to retest better risk, short-term buys to sell down to 35,200 to retest better risk versus reward buys, sorry, at 35,200. Okay. All right, everybody. So I don't want to make this webinar too long. Through this webinar, we went through some key fundamental points to focus on, as well as higher time frame analysis, dissection of fundamental impacting factors and why the market is doing what it is, technical analysis, understanding of the economic events we have coming overnight and the economic events we've had so far, as well as the impact on market sentiment when looking at equities, dollar movement, Japanese yen, and VIX. And we laid out trade ideas on the intraday timeframes as well as scalps for gold, GJ, GBP USD, EURUSD, USDCAD, and US 30. Now remember, I am not a fortune teller or a market wizard. Remember to always do your own due diligence, follow your trading plan, follow your risk management plan, and put in as much time and effort into learning the markets as you can, okay? Within the description here, you have tons of links for the Capital Hungry News Twitter, the Capital Hungry Free Telegram Analysis channel, and obviously this YouTube channel itself, where you have tons and tons of information on fundamentals, technicals, scalping, day trading, trading psychology, and more. If you want a more in-depth approach to the markets, as well as more training, fundamental knowledge, and community involvement, you can come join the Capital Hungry private channel. We host these types of market update and trade idea webinars 5 days a week, every afternoon. We do a scalping New York session every single morning, 5 days a week for 1 to 2 hours long. We do a London trading session that we're starting to introduce multiple times a week. We do a weekly recap webinar, refresher webinar, weekly psychology webinar, weekly political events, economic events report, breaking down fundamentals and technicals, live trading, market updates, swing trading analysis. It's way too much for me to describe. The majority of people who join Capital Hungry say it's like doing another university course on top of actively making money as well, right? If you guys want to check out an example of our New York scalping session, I just posted a YouTube short today where we took advantage of the gold sells thanks to the fundamental catalyst of Jerome Powell bringing market optimism and the US dollar strength and weakness on gold, right? And any private channel members within the YouTube audience right now will tell you how in-depth the private service is. It's unlike any other trading community out there. It's not just some random signals or Fibonacci or people just sharing charts about random shit. It's a pure, realistic approach to the markets, fundamentals, technicals, trading psychology, and tons of content and involvement every single day, week, and month. But anyways, thank you all for your time. I will see you all later, and I will see you all on Wednesday for the New York scalping session, 7 a.m. Eastern Wednesday. Make sure you like, subscribe, and comment on the saved stream to help with the YouTube algo. And I'll see you all next time.